morning, everybody. Welcome back to FreightWaves Now after a long weekend. It's exciting to have you guys back with us. I'm Kaylee Nix here with Michael Vincent.
Yes, welcome back, everybody. Coming up, we'll talk with Mary O'Connell about a chassis shortage in the Midwest, as well as we'll talk with Andy Burke from Blue Grace about how to deal with the 3PL. But first, our top story, which takes us into the oil markets and fuel prices and the possibility we might see a downturn in the futures markets. That's where we bring in our fuel expert, Mr. John Kingston. What's going on, John?
Well, let's see. The ultra-low sulfur diesel futures price on Friday dropped about 23 cents per gallon. It traded yesterday, but it didn't settle because of the holiday. But pretty much all day yesterday and even now as we speak, it's up about 14 cents a gallon. Now, if you came to me to explain why it dropped on 23 cents on Friday and then rose 14 cents on the next trading day, you have come to the wrong place. Because when a market is this volatile, it does strange, bizarre things that, quite frankly, are inexplicable. There is no news. I mean, I think last week that big drop happened. It really kind of happened across the board in other petroleum markets, too, in crude and gasoline. And there was just a feeling that, if the world is headed toward recession, then you're going to have less demand. As far as why it's up today, I couldn't tell you. But I will tell you that diesel is once again up at a higher rate than the rest of the complex. And that's really concerning for diesel consumers because they're pulling their hair out because they know that diesel's going up more than the price of crude. We've talked about this before here on FreightWaves Now. We've talked about the reasons, and we'll get into one of the reasons soon. But that spread between diesel and crude has been very volatile, very much kind of favoring a stronger diesel market. And that's a real issue for the diesel consumer as well.
Yeah, it really is. But the volatility of it kind of begs the question of how did we get here, right? Because and what does the future hold? What events can happen that would alleviate or make it worse, John? I mean, because that's part of the confusion, right? Is you kind of go all the way up to March and then boom, at the end of March, everything just explodes. And we also know what happened there. So why did those events cause what's happening there, and what reverses it?
Well, first of all, as far as Russian crude supply, increasingly there are a lot of reports out there that crude supply is getting kind of back to normal. Obviously, it took a big hit in the beginning when companies and countries shied away from Russian crude and the Russians had to cut their output. And there are more and more reports out there. Obviously, it's hard to confirm all of them, but from pretty reliable sources that, in fact, Russia has been able to find other buyers that aren't quite as sensitive to what Russia is doing in Ukraine, like primarily in China and primarily in India, that is taking their crude. So it's not going into Europe the way it did, but it is finding other homes. And ultimately, the world is one big marketplace, and things tend to balance out. Now, you do get imperfections in shipping. The reason they shipped a lot to Europe is not because they've got such great affinity for Europe, but because it makes more sense in terms of lower freight costs, that kind of thing. So you're talking about longer freight hauls to go from Russian ports to India or China. As far as why diesel has soared above everything else, you did lose significant refining capacity in Russia. They are a major diesel supplier. But to the point that Kaylee made at the start of the show in the introduction, I think there's a growing feeling in the market that IMO 2020 is finally having its impact on diesel 2 years after it was supposed to, 2+ years after it was supposed to. So let's talk about IMO 2020 for a minute. It is a rule that requires significantly tighter sulfur specifications in marine fuels. It went into effect on January 1st, 2020. The problem for diesel was that some molecules that are usually used to make diesel were going to be diverted into the supply of marine fuel, which hadn't happened previously. In some cases, they used a diesel-like fuel, but mostly they used a heavy fuel oil. That fuel oil was going to have to get pushed aside in favor of these new blends, which relied on diesel molecules as their building block. So what happens on January 1st, 2020? The market goes, the rule goes into effect. There had been some signs in the fall of strengthening diesel as the market got ready. And then 2 months later, the pandemic hits, demand collapses, and the whole issue of IMO 2020 seems to go away because there's a surplus of everything in the market. Well, there's not a surplus of everything in the market now, and I think there's a growing feeling in the diesel market that IMO 2020 is having its day right now, and it is pushing up the price of diesel relative to everything else.
I have so many questions for you, John, because this is an area of the economy, et cetera, that I really don't know that much about, and you're very, very knowledgeable on what's going on. But the first one I want is just clarify the volume impact of the IMO 2020, right? You talk about it's taking some molecules there. And when you say that, ignorant people like myself think, well, they're really small, so what does that matter? But what is the volume impact? What is the volume impact that we're talking about here, John, to kind of lend some credibility to this feeling that it has an impact on diesel?
That's a good question, and I really don't know. When I say molecules, when you put crude into a crude tower, that's the basic building block of a refinery.
Right.
You bring heat to it, and first some things burn off. And anyway, there's an intermediate product that comes out of it called vacuum gas oil, and vacuum gas oil is amazingly versatile, and it can do lots of things, including make diesel. So when I talk about the diesel molecules, I'm really talking about some of those VGO supplies that had gone into making diesel, instead now going into making this very low sulfur marine fuel. I would say that I don't really know about how many diesel molecules or what's the quantity that are being diverted, but I think increasingly we know that it's somebody's going to really hold me to this. A few 100,000 barrels a day makes sense, given the size of the fuel oil market, the marine fuel oil market prior to IMO 2020. That's a lot.
Hey, when you get a chance to make John uncomfortable, you got to take it.
Yeah, it may not sound like a lot, but it's a lot.
It is, but so here's my follow-up, and excuse me, Kaylee, I'm sorry, but I wanted to ask this a little bit earlier because I think it's really interesting because you bring about a whole lot of different points in what we're talking about today, and I think it's incredibly interesting. You talk about the entire world is a logistics supply chain, right? I mean, everything interconnects, and we lost this kind of volume of petroleum and oil coming from Russia into Europe, and that kind of disrupted things, and now it's being diverted to other areas, which diverts others, et cetera. So what, in your opinion, what is more important, the actual flow of oil or the fear that it might get cut off or become greater in the fluctuations of the prices that we're looking at? Because it seems that it is more fear-driven or feeling-driven, as you've said a number of times, feeling, than actuality.
It's interesting you say that because I saw a headline this morning that either the oil minister, either from either Kuwait or Kazakhstan, some country that exports oil that starts with a K, said that he thought there was a $30 war premium in there, that there's $30 worth of people bidding up crude because of concerns about not having enough, and that's added $30 to the price. That's a significant amount. I mean, that would take it down about $80, $75 to $80 a barrel, as opposed to $115 to $120 now. So I'm going to rely on that and say like that's the amount of that's the amount of money in the price that's the result of a fear factor.
A good 25, 30% of the price is the best we can hazard an educated guess at fear factor.
That, I mean, again, I'm going to go with the minister, and
How do you argue?
You know what? They do their models. They know the order book. So I think that's a reasonable answer.
Yeah.
John, I want to get one question in here before we let you go today. Talking about IMO 2020, is there any possibility of maybe rolling back that regulation, or kind of taking a step around it to kind of look at a solution for what's going on right now if it really is having that big of a significant impact on prices?
No, they're not rolling it back. I mean, let's talk about it. This rule was first introduced, I think, in like 2004. Okay, so it's not like they just dropped this on the marine market with a few months' notice. They had like 15, 16 years to get ready for this. It's not being rolled back. Now, look, the big factor, though, and you're going to have Greg Miller on later, I know, and he can talk about this too, is scrubbers. You can put a scrubber on a ship, and you can pour really high sulfur fuel oil into the ship to power the ship, and the scrubber essentially extracts the sulfur from the emissions. The economics of doing that is a function of obviously the cost of the scrubber and the difference in the price of very low sulfur fuel oil, the low sulfur fuel, and high sulfur fuel oil. What is that spread? How much do I save in being able to buy high sulfur fuel oil versus the cost of operating the scrubber? And that's not a fixed relationship. It's very volatile. So a company has to make a decision. Okay, I think the spread is wide enough to do this. I feel confident that the spread will stay wide, that the economics will work. So, I mean, Greg, in the run-up to IMO 2020, Greg wrote a lot of stories about scrubbers and how many we're getting put on ships. And like I said, it's very much a function of the price between these two things. If the price of diesel continues to grow, continues to drive higher, and that drives the price of very low sulfur fuel oil higher with it, then that spread becomes wide enough that it may be justifying the construction of more scrubbers. And now you can still burn the high sulfur fuel oil, and the scrubber takes out the sulfur, and you're in compliance with the rule.
So, John, when you talk about the IMO impact and other impacts, the war disruption, et cetera, does some sort of just-in-case type of policy on refining capacity make any sense, or does it economically make any sense, or does it make no difference whatsoever?
The refining industry is a strange one. It's almost amazing that anybody puts any capital into it because, they have a couple of great years and everybody's at partying, and then they have like 10 miserable years. It's a very strange business. So obviously they are having years like in their wildest dreams they couldn't imagine. Yeah. But does that mean that people are going to are going to sink capital in on the basis of this? New refineries are getting built in the world. In the U.S., it's not a new refinery, but ExxonMobil is putting in 250,000 barrels a day of new refining capacity at their Beaumont, Texas plant. Like, that's a lot.
That's a bunch.
That's almost like a big-size refinery on their own. So, you got to wonder at these levels whether there's some entrepreneurs out there who are thinking, okay, you know what, I think these spreads are here for a while. And maybe one of the reasons I think these spreads are here for a while is because of IMO 2020. And that they will not build a new refinery, but maybe they'll unmothball some ones that have been shut. Maybe they will add to capacity. Certainly bring in the engineers and try to debottleneck where they can. So the incentives are there to do it, but it doesn't just happen. It's not like I'm trying to find a good analogy, and I'm not going to do a good one, so I'll just forget it. But it's complicated.
Yeah, no, it sounds a lot like the microchips and the issue we got with those as well.
Semiconductors, yeah.
Yeah.
All right, John, thank you for joining us this morning. Always great to have you on, and excited to see how kind of Greg Miller takes this conversation later on in the show as well.
Yeah.
Right now, we're going to head over to the wall. We've got our first carrier update of the morning with Donnie Gilbert and Tony Mulvey.